Singh, Managing Partner at Amset Capital, joining us on the show. Hi Anurag, good to be speaking with you, and the record run continues for the US markets. There's been no stopping, but yes, globally the big event that everybody will be tracking is the much awaited US and Russia meet. But Anurag, heading into that, the US markets are showing resilience. For Indian markets, we are also building on some positive hopes. But if at all these talks turn out to be on the positive side, how do you think the reaction will be for the US markets? And along with that, Anurag, any sectors, be it metals, oil, do you believe that can have a big impact?
Srishti, morning. There's a lot to unpack there. Let's focus on the US markets first. So look, US markets have really climbed the wall of worry on tariffs. Now that broadly all the deals are behind us, and the markets have now gained confidence that what is the perspective of current administration on tariffs. Eventually, where we are ending up is that before this government took over, tariffs were around 3% of all the imports in US. Now they will end up at around 17-18%, which means some additional 350 to 400 billion to the US government treasury. Good, bad for the economy, maybe mixed, but one idea also is gaining ground is that the importers will be able to pass at least half of it to the suppliers, right? So that's some good news. It has not reflected in the inflation numbers for the past 4 months now. So all this bogey of tariffs will result in inflation. Actually, now there are other theories coming up, but that's also good news. And finally, we are expecting good rate cuts this year. I think Goldman's view is kind of pretty apt. 3 rate cuts this year. It might be a 50 basis point this time because labor market turned out to be much weaker, especially when the numbers were revised. So June and July, May and June, we barely added any jobs. And I doubt whether the 75,000 number for July is also correct. That's also might be revised later now, right? So overall earnings solid, except for some fast food chains. Earnings are broadly in line, solid. Rate cut scenario under playing. Job market still holding good. So overall it is pretty much a Goldilocks scenario for US market. So nothing wrong here. Don't forget, tariff is one element of the government. Low taxes, R&D write-offs in first year, and lower regulation, which is broadly deregulation across sectors. So those are the big impetus, which I think broadly serve very good for the market for at least 2-3 years until this administration is there, unless something unforeseen hits. So that's the picture. US markets look solid, good. Probably will touch 66 or 68 or even maybe 7,000 by year end. That's where we are. In terms of the Russia discussion, I don't think it impacts US market as much. I think it's more a solution for Europe and the NATO way forward. I doubt something very consequential will come out because, and again, my limitation, I don't understand geopolitics too much, but I'm sure Putin would need some guarantees on NATO expansion, that Ukraine will not be included in NATO for the coming future, which of course all the NATO members have to agree. European Union members won't agree to that. So there is a stalemate there. But, that's where we stand, be that as it may. Finally, I think it is on your questions on metals and oil. Look, oil, we are in a regime for the next 3-4 years where oil will continue to be within the affordable range, which works good for India as well, right? And all the emerging market countries as well. That broadly between 65 to 85, that's a good range. So because, the president is pro-drilling, so I don't think there is a scarcity of oil unless there is a war that comes up. Metals, yeah. I don't have a view. It all depends on China. How China behaves, that decides the price of metal.
Absolutely.
So too much answer, Srishti. I hope I've been able to cover the points.
Well, Anurag, of course, yes, lots to talk about. All eyes are definitely going to be on that Trump-Putin meeting tomorrow. But Anurag, purely speaking about the US markets on the equity front, fresher highs coming in across the board for the US market. You have other asset classes
also that are doing well right now. Just want to revisit some of Trump's comments he made a few days ago when their CPI number trickled in, and he's looking very confident as of now, saying the tariff has not impacted the US CPI. Do you believe right now is too soon to be talking about the impact? Maybe we could see that in a bit, or do you believe the US CPI number now looks convincing enough to merit a rate cut?
So the CPI number is still stuck for the past 12 to 13 months within that 2.7 range, right? So that's the stickiness of the inflation. The change is that services, especially the housing, is now pretty much at 0.2% month on month, which is a good number. In fact, there are some other elements of housing, the insurance and healthcare, which is kind of killing it. But eventually, with the demand slowdown little bit, which is happening with deregulation and low government spending, that should be under control. For the past 4 months, it's not that we have not seen some inflation on goods side. There is. But eventually, the experience now is that it will be one-time pass through of the prices, and it will not cause it to a perpetual inflation. Why? Because everything depends on the labor market. The 21-22 inflation was because labor market and wages were pushing inflation. That's not the case now. Wages are dropping to like 3.9, 3.8% annual increase, which is still higher, but it is dropping down consistently, and it will drop down further. In terms of data, I agree. If I'm with President Trump, if you can revise the numbers, but you can't say in June and July we have 220,000 jobs created, and then suddenly reduce it to say, oh, only 15,000 were created. That's too out of the whack, right? And I think if, those are the numbers that Federal Reserve relies on. I mean, we've Federal Reserve members who have come out and said that had we seen this data revision, we would have cut the rates in the last meeting. So I think some heads need to roll here, and which is the right call. I think I don't know whether the data will improve so quickly, but I'm sure somebody needs to own up the accountability if the numbers are revised that much, and when everybody is watching those numbers, right? But in any case, we are getting at least 2 rate cuts, or most likely 3 this year. That's what it looks like. Inflation eventually will be curtailed. I have reasonable confidence on that.
Absolutely. Anurag, you say you don't understand geopolitics that much, but you give a quick know-how of geopolitical markets, global front, as well as your view on the overall markets. Thank you so much for giving your time at this hour and joining with ET Now.
Thank you. I appreciate it.
All right, let's move ahead and talk about the domestic markets. Yes, we do see a lot of volatile scenarios in the global front, but the domestic markets are absolutely showing good signs of positivity, and that was a picture in the market